Okay, so the date is January 22nd, 2026, and I have to say this out loud because it sounds completely insane. The global economy is being held hostage over a real estate deal for an island of ice. No, this isn't a skit. We are staring down the barrel of a massive 10% universal tariff on our European allies, all because Denmark won't sell Greenland. It sounds ridiculous, I know, but the consequences for your wallet, they are very, very real. Let's get into it.
And there you have it. That's the logic straight from the source. A massive geopolitical standoff that threatens decades of global trade is being treated like a simple property flip. It would be hilarious if it wasn't the single biggest threat to our economy right now. And that's the kind of thinking that's putting your savings directly at risk. So yeah, you can laugh all you want about buying Greenland. I get it. It sounds absurd. But you know what's not going to be funny? Your grocery bill, your car payment. The bill for this deal is headed straight for your kitchen table. So let's just break down what we're calling this deal from hell. At its very core is a threat, a blanket 10% tariff on all goods from the European Union unless Denmark comes to the table to negotiate the sale of Greenland. It's a completely unprecedented ultimatum. 10%. Let's really focus on that number. You got to understand, this isn't just a figure on a page, it's the weapon. It's a tax that would get slapped on absolutely everything, from German cars to French wine. Just try to imagine every single European product you buy suddenly costing 10% more, overnight. That's the opening shot in this trade war. Right, but here's the thing about tariffs. They're never a one-way street. You can't just throw a punch like that and expect the other side to stand there and take it. It always, and I mean always, sets off a chain reaction, a tit-for-tat trade war, and this is where things can really spiral out of control.
Okay, quick refresher just so we're all on the same page here. What even is a tariff? Super simple. It's just a tax on stuff we import from other countries. The goal is supposed to be to make foreign products more expensive. But in reality, guess who really ends up paying for that price hike? Yep, it gets passed down to the consumer. It gets passed down to you.
And this right here, this shows you exactly how the spiral works. So round one, we tax their cheese and cars. Okay, but Europe isn't just going to accept that. So round two is retaliation, and they're smart about it. They're not going to tax our cheese back. No, they're going to hit us where it really hurts. They'll tax our iPhones, our software, the very heart of the American economy, which leads directly to round three. Our stock market, which is so heavily dependent on those tech giants, takes an absolute nosedive. So this whole downward spiral, it has a name. And trust me, it's one of the most feared words in economics. This is how you end up with stagflation, a really toxic cocktail of economic pain that cripples both businesses and consumers. So why is Europe's retaliation so darn effective? Well, just look at this chart. Nearly a third of the value of the S&P 500. And we're talking about the benchmark for the entire U.S. stock market, and probably your retirement fund, is concentrated in that very same tech sector that Europe is targeting. They know exactly where our economic pressure point is. So this is the crucial point. When you strip away all the political noise, this is the trade-off that's on the table. We are risking our financial security, our retirement accounts, and the health of our whole economy for the potential to buy a giant glacier. Let me say that again. We are literally trading our stock portfolio for an island of ice. And this is the result, stagflation. It is the absolute worst of both worlds. The price of everything you buy goes up because of the tariffs, that's the inflation part. But at the exact same time, the economy shrinks because the trade war is killing business and investments, that's the stag part. It's a nasty economic trap that's incredibly difficult to escape. Okay, so we've been talking about the big picture, the stock market, the economy, but now let's bring this right back home. Let's talk about why this is about to become a very, very personal crisis. This is where that inflation trap closes in on your wallet. And here's the really scary part. See, back in 2025, a lot of big companies, they ate the costs. They had warehouses full of inventory they'd imported before all this tariff talk, so they didn't raise prices on you immediately. But now, those warehouses are empty. Every new product coming in has to pay the tax. The grace period is over. This is inflation 2.0, and by March, you are going to feel it. And what does feeling it look like? Expect a price spike of 15 to 20% on major imported goods.
I mean, if you were planning on buying a new car, a laptop, or any major electronic device, the clock is ticking. You might have already missed the bottom on prices.
So look, this all sounds pretty bleak, I know. But the point of this isn't to scare you, it's to prepare you. So let's pivot from the problem to the solution. How do you actually protect your money when the world seems to be going crazy over an island? Okay, here are 3 key strategies to think about. First, think domestic. Look into smaller American companies, the ones that make and sell their products right here in the US. They're basically insulated from these international trade wars. Second, be wary of the global giants. Big multinational brands like Nike, Coke, and McDonald's are prime targets for retaliation. And third, consider a hedge. In times of chaos and inflation, tangible assets like oil and gold have historically been a safe harbor for investors.
So, I'll leave you with this question. After seeing all the risks, the retaliation, and the real-world cost to your wallet, what do you think this is? An incredible masterstroke of negotiation? Or the art of crashing an economy? Because the answer will probably determine what happens next.